The Nigerian currency continued its free fall yesterday, hitting an all-time low on the black market. On Tuesday, the Naira exchanged for a shocking 1,825 Naira per dollar, marking a significant 6.3% drop compared to Monday's closing rate of 1,710 Naira. Adding to the woes, data revealed a dramatic decrease in both official and unofficial dollar transactions. Combined dollar sales facilitated by banks and individual trades plummeted by 26.59%, totaling only $66.43 million on Monday. This drop is a sharp decline from the already low $84.10 million reported on Friday. And joining me for more on this and other related stories is Head, Fixed Income and Forex, Chapel Hill Denham Securities, Oladipo Ajayi. Thank you for joining me today.
Yeah, good morning. Thank you very much for having me on.
But I'd like to say it would seem the windfall is over, because I remember earlier in the month, the Forex market recorded an impressive volume of $800 million in a single day. I mean, are the new measures waning already?
Well, of course, there's still an iota of lack of confidence that still remains in the market, because if you are seeing the rate at which Naira has been implementing, of course, everybody wants to stay back and see where will he land. Because imagine an investor that actually invested, maybe came in early in the month when rate was around 1,300, 1,200 levels. And now looking back, found out that the rate is around 8,800 in the parallel market and over 1,600 in the official market. So, of course, what we are doing is that you're already having a loss on your book, exchange loss on your book. So I think these are some of the reasons why most of this inflow that you have expected from foreign investors actually is falling. A lot of them want clarity. A lot of them want stability. They want us to get to a level where the level of volatility in the market would have actually waned out compared to where we are now. So I'm actually not surprised when we are seeing that big inflow of FX into the markets, because I feel that the market is still very much volatile, and a lot of them will actually know what to jump in now.
But what necessitated that particular inflow, and can't that same factor be, reignited so we can have it again? I mean, all of the things you talked about, the sentiments that investors have or had, those sentiments were there even before we made this impressive number.
Yeah, because one thing you have to also look at, the sentiments have worsened since that time to now. Because if you look at the rate at which Naira actually depreciates on a daily basis, it calls for concern, and a lot of people are perturbed with the rate at which the currency is losing value on a daily basis. So I think it's beyond what it was when they were coming in. And aside that also, we also note that that particular point in time, the central bank actually issued treasury bills, and this actually attracted most of those foreign guys into the market. Of course, they actually issued at an attractive rate of 19%, effective yield of over 23%. And these actually attracted most of them to the market. But one thing is that the yield we are attracting to the market, but if you're not very careful, everything you have earned on the return side, you will lose on the exchange loss side. And that's why most of them are being very careful as to pick down to actually jump into the market. But just like what you said, I think the mandate to actually wait it to actually find a way to actually change the current sentiment in the market around the moment. They're able to actually come in and stand their ground and actually propound positive forward goal that can actually restrain a bit of confidence in the market, that can actually give most of these foreign guys confidence to actually come into the markets.
Speaking of confidence, really, are you confident in the way the CBN is handling Nigeria's Forex challenges? Because we're seeing the resultant effects on prices of goods and services. Talk about the pass-through effects on inflation and some other things, really. Nigerians are not happy, and we are seeing, protests and all of that, springing up in various, across the country, basically.
Well, I'm sure everybody's feeling it all together, so it will be insensitive somewhat say that everything is rosy. But however, what we're currently seeing more like a foundation and structural issue, and what the current CBN government is trying to do is that to put those structures in place, to put those process in place so as to forestall future happening of or recurrence of what is currently happening now. I feel that the CBN is getting there, but just that the only thing that is still outstanding is liquidity. So we need liquidity in the market because no matter how much more policy you actually propound to the market or you push into the market, if those things does not actually attract immediate liquidity or immediate inflow of FX into your market, of course, it will be to naught because market will not budge until the market sees liquidity. So and that's currently what's currently happening now. Most of the demands we are currently seeing, and they are becoming more like a panic demand. Maybe people that have obligations in December and they're already seeing where the currency is trading now. They were like, most of them were like, oh, am I sure the currency will still not worsening by December or maybe twice the level? So a lot of them are actually jumping into the market to actually hedge themselves against future obligations. And when you find yourself in this kind of situation, of course, what will happen is exactly what's happening in the market because we keep seeing...
Let me come in here. Okay, I would like us to wrap up with this particular one because there are other headlines we're looking at. So some persons have said some of these measures taken by the CBN are probably administration and less administrationary, and some are saying it's short-term, it's knee-jerk, and all of that. So looking at all of this, can we talk about long-term measures, measures that will ensure long-term solutions at the end of the day? Do we just need this administrative? Yeah, that's the word. Administrative measures or something structural that will actually ensure that we see a change at the end of the day, not just some knee-jerk or short-term measures?
So on the part of the central bank, you understand, they don't have as much weapon to actually deploy in such a time like this. And that's one of the reasons why most of what we've been seeing are more like administrative, like you mentioned. But for me, there are also processes and structures that need to be in place for us to have a credible FX system. But just what is not currently happening is the inflow of FX into the market. And this has to be done in collaboration with the fiscal policy guys. And Nigeria needs to go on road show. You need to actually reassure foreign investors about the market. You have to pitch your market to investors and for them to actually come into the market. Because no matter the number of policies you propound, if you don't have liquidity to actually defend the currency, of course, it will be a very difficult one. And that's why we found ourselves where we are now. So we need liquidity. And I'm sure immediately we start seeing liquidity in the market, we'll see more like a rebound from where we are currently trading now.
Also, away from that, let's look at Nigeria's Debt Management Office, which could only raise around half of its intended sale of 2.5 trillion naira in 7 and 10-year bonds recently. That was on Monday. And it was only able to sell 1.49 trillion naira worth of bonds, and that's about 60% of the amount offered. What does this say about investors' appetite and sentiment, if you may?
For me, I would say that actually, I never believed that they would be able to raise 60%. Because 2.5 trillion is not a child's play. And ab initio, I was thinking that for them to actually push such a volume on the calendar, it simply means that there would have been an off-taker. Because I don't think they will have such confidence to actually offer 2.5 trillion. And I was surprised that it doesn't seem like there's any off-taker anywhere. But yet they were able to actually muzzle out close to 1.5 trillion. In the market. I'll tell you, 2.5 trillion used to be like an annual borrowing in this market. And this is just what we actually floated in just one auction window. And the fact that they are still able to actually raise about 1.6 trillion and about 1.5 trillion, and couple the fact that they were still able to actually raise at that attractive yield level, I think it's a very good one for that. But my key concern is that I also need to understand why the desperation at such a time like this. I also need to understand that all is in tandem with the policy of the direction of the monetary policy guys, because I'm actually surprised when I saw 2.5 trillion on a bond calendar, because I know that that's the tall order. But a lot of people in the market are even thinking that maybe it's a way to actually get foreign investors to come to the market. But to speak, I doubt there's anything like that, because we've not felt the effect on the FX side of the market. So it simply means that most of these bids that we saw, they are more like domestic bids and not foreign investors' participation in the market. But however, I think they did very great in that auction.
All right, so finally, let's close with the federal government's plan to raise about $10 billion in revenue to boost liquidity in the foreign exchange market. Too ambitious, very achievable? I mean, in 30 seconds.
I think it's actually very ambitious. We've had this before. They told us something like this October last year, and but as we speak, we have only been able to get about just over $2 billion from Afrexim, and other cash flows have not been in the market, have not come into the market. And if you remember vividly, the last time we had this, we saw Naira appreciated from around 1,300 back to 1,000 Naira when this was announced to the market. But one thing is that when you announce things like this and it's not backed with action, when you announce things like this and it's not backed with result, of course, you tend to see market revert back to where it used to be, and that's exactly what's happening. So I think that the government needs to actually come clear about, you don't just mention huge money just to actually make it sound as if that there's a lot of hope out there. But it's better for you to come out clear and say, oh, this is what we're, even if it's just 2 billion, make it clear it's 2 billion. But what really matters is how are you going to deploy the money is what matters, and that will actually create a bit of stability in the market.
All right, thank you so much, Oladipo Ajayi, for joining us on the show and also sharing your thoughts with us. Thank you.
Welcome.
Glad to know you're still with us. An investment banking firm in Nigeria has cautioned against further interest rate hike by the Central Bank of Nigeria, CBN, saying such move is not good for the economy. The firm further predicted that the Naira might stabilize around the 1,500 Naira per dollar region for the next months, attributing this to increased participation in the NAFEM window, suggesting that liberalization policies could keep the Naira within the 1,500 Naira per dollar mark to the 1,600 Naira per dollar range for the next 6 months, barring unforeseen circumstances. Well, joining me for this is the Head of Research, Commercial Partners, Dr. Ifeanyi Oba. Dr. Ifeanyi, thank you for joining me today.
Thank you so much for having me.
All right. Well, some analysts, including yourself, have cautioned against further interest rate hikes by the CBN, saying such a move is not good for the economy. Could you expatiate on this?
Okay. I think the bone of contention would be the correlation between interest rates and inflation. So what we have seen by looking at the data is that when you run a correlation analysis between interest rates and inflation, you see a positive relationship. That means anytime you increase interest rates, we have a follow-up increase in inflation, while we are expecting a negative relationship as regards to a prior expectation. But Nigeria's situation is different, and the structural relationship of how goods and services work around the economic landscapes gives us that nuanced perspective in Nigeria. So having an upfront solution of just increasing interest rates without accounting for these factors might not be the way to go. However, there's also some benefits from increasing interest rates, which could also be seen as giving confidence or stability to the currency, which we desperately need at this time. But I guess the bone of contention would be the CBN digesting these numbers and coming out with the best solution in order to give Nigeria the best foot forward.
All right, I like what you've said, trying to see the correlation, between interest rates and, of course, inflation rate. But we see that this same monetary tool is, effective in some of the climes. And you talked about something. You said there are other factors, maybe some structural factors and all of that. So beyond using this particular monetary tool, what other factors or what other monetary policy tools do you think the CBN can actually use to address inflation in Nigeria if you feel that, the hike in monetary policy rate isn't really doing much?
Okay, so the interest rate already in Nigeria is already high, and what we can use to tackle the inflation problem would be a mixture between fiscal policy and monetary policy. Like when we drill down to the root cause of inflation, we can see that food inflation is the primary driver of our accelerating inflation. And by the time we check the dynamics of this food inflation, we can see that food at farm gate remains stable, while food at a marketplace is what is elevated. So looking at how we can try and reduce these elevated prices at the marketplace will go a long way in solving the inflationary pressures. Also, we have insecurities happening with the farmers and the high transportation costs. All these are not things that the CBN alone can handle. But what the CBN has chosen to do is to strengthen the transmission mechanism. What do I mean by that? So the reason why the interest rate is not actually having the desired effect on the economy is because, like you rightly said, Nigeria's structure is different. And the structure of Nigeria is not credit driven. That means the person that is starting this business might not necessarily go to the bank or find other sources in order to get funds rather than going to the bank directly. That's why we don't see an interest rate hike affecting the economy instantly. What the CBN has tried to do is try to make sure the transmission mechanism is more effective, make sure the banks are giving more loans and participating more in the economy and shoring up that base as they have a goal of reaching $1 trillion economy in terms of GDP.
All right, well, let's look at this again. Still talking about Nigeria's inflation. I like how that you've addressed insecurity and food inflation, which, of course, we see the impact. But looking at the foreign exchange volatility that Nigeria currently has, it has significant pass-through to Nigeria's inflation, among other factors which you've also mentioned. So this tells us that addressing the foreign exchange crisis will significantly impact inflationary pressure. So first, do you think the Apex Bank is doing enough to address this particular issue, which has significant pass-through? And then what do you make of the recent policies of the CBN? Whether it is the cash pool or the price control, the PTA, BTA, or even the IMTO, and, all of those other measures?
I think this is a situation of it's going to get worse before it gets better because where the APS banks had come from were coming from a situation where there was lack of transparency and the policy used by the then CBN governor was that of a controlled policy, while the policy that this CBN governor is happening to use is a laissez-faire policy. And he has been doing that in order to liberate our market. And this is also going by the recommendation of the World Bank and other international committees. So liberalizing the market and allowing the forces of demand and supply determine what happens in the market has some cost. And the cost is what we are bearing by having the Naira fall to the region it's falling as at now. But immediately we can give the confidence we can to the foreign investors. We will see certain level of stability. We can show up our reserves and gain confidence. That's why looking at ways to stabilize the exchange rate is very paramount. But everything the CBN can do can only be short or medium term because the foundation of exchange rate is just a measure of exports versus imports. And until we're able to shore up our exports in order for it to, make the imports not outweigh the exports, we would still be having a situation of our exchange rate falling to in regions that we don't like. So even though the CBN can have a near or medium term fix, we still need a long term solution that is rooted in increasing our exportation, reducing our imports demand, especially for food and agricultural services that we can produce ourselves. We are not going to come out of the exchange rate high. And remember, this is not just something that is peculiar to Nigeria. SSA countries, in fact, African countries all around the world have been facing problems with the dollar and struggling with the dollar. That's why conversations around looking for an alternative currency for international exchange like the BRICS currency has been gaining mainstream audience.
Well, looking at some of the things you've talked about, some of them sort of fall within the fiscal, authority. So what do you think? Do you think that authority has actually been doing enough to address these issues that you have outlined?
So they can certainly be doing better. What we actually need in Nigeria is a synergy between our fiscal and monetary authorities because we cannot have the fiscal authority pushing a policy that negates the monetary authority. We are going to have a counteractive result and who is going to bear the brunt of it is the everyday Nigerian. There's a popular saying by Karl Marx, like if a doctor or a lawyer makes a mistake, it leads to a casualty of one. But if an economics or a political scientist makes a mistake, it leads to a casualty of multitude of people, hence the enormous hardship. So even if they have done a little, more needs to be done.
All right, so let me ask you this particular one now. Do you fear that the exchange rate may spiral out of control, as some are already saying, and some persons are saying maybe in the next few days we might begin to see the Naira, exchange at 2,000 against the greenback? Are you concerned about that and the implication that could have on the Nigerian populace?
So my concern about the exchange rate is not necessarily the rate at which it falls. My concern is the stability. So whether the exchange rate is at 2,000, 1,000, 1,500, it's not really the main bone of contention when it comes to, bringing in FDIs.
But this is a two-way street. Let me come in here. This is a two-way street. There is the part where we want investors to come. We want them to see some level of stability so they can come in. But then we also have the populace, the people who are suffering, the people who can no longer afford the things they could afford before now. Shouldn't you be looking at all of these things before making decisions?
Yes, you're very correct. Like the economy is facing a lot of hardship right now, but it's only going to get better after it gets worse. It's like the pill that you're going to feel sick a little while, but after you feel sick, you're going to get better. Because from where we are coming from a place of darkness, and for us to move into gradual light, it would require people tightening a little bit of their buckles and bracing themselves for economic hardship. But in the long run, if the policies and measures are followed and are outlined for the progress of Nigeria, I feel in the long run we're going to see an uptick in the value of our currency, an uptick in the GDP of the country.
All right, thank you so much, Dr. Ifeanyi, Head of Research, Commercial Partners. It's been a pleasure listening to you today.
Thank you very much.
Fitch Ratings anticipate a swift rise in bad loans for Nigerian banks following a sharp Naira devaluation, projecting potential economic challenges. The devaluation exceeding expectations aims to address forex shortages and attract capital inflows. Joining me for more on this is Olusegun Enitonada, the CEO of Zoja Pay. Thank you, Olusegun, for joining me today.
Thank you very much. It's a pleasure being here.
Okay, so let's get right into it. Fitch Ratings has projected a faster increase in bad loans in Nigerian banks, and the reason is not far-fetched. This is due to the latest depreciation of the Naira. Help us paint a clearer picture of the correlation, between the two.
Okay, so based on Fitch Rating projection of the faster increase in bad loan, this is really due to the sharp devaluation of the Naira due to several interrelated factors, such as the economy stability, the currency risk, the currency, and also the high import dependency that we have in Nigeria. So talking about the economic stability, if we look at the devaluation that is currently affecting us right now, this is due to the fact that a whole lot of people right now are also having low power to be able to purchase. And this is because of the high cost of goods within the country. And this is really affecting a whole lot. And same thing is also going to be affecting even businesses and individuals because of the high cost of operating, which affects the way people will be able to even offset their loan in terms of income and revenue.
All right, so looking at this, are there measures banks can adopt to control, the rise of bad loans?
Yes, certainly. There are various measures that can be adopted. However, in adopting these measures, there are also some constraints that it also will bring. First of all, in terms of the measures, a bank can be able to ensure that they put in more due diligence in place when it comes to risk assessment, when it comes to quality assessment, and ensuring that they give out loans to the first people that requires loan. Another area is also ensuring that they do not over-concentrate their loan on a particular sector or on a particular aspect, and also ensuring that due diligence are being carried out on various individuals that require loan at every point in time, and while ensuring that their liquidity is intact.
All right, I like what you said about, they should not concentrate on a particular sector. But is there a possibility that there are some sectors, that are more immune to, some of these things?
So the sectors where we really see a lot of these things certainly are the sectors whereby we have a whole lot of importations occurring, importations, and also sectors whereby we see a lot of government policies affecting from time to time. So, but like I rightly mentioned earlier, one of the main aspects is importation. And if we look at it today, almost everything we currently do in Nigeria is based on importation. And this currently right now is affecting a whole lot. So really, based on that, it's very difficult for, even for banks to be able to redistribute their loans. But however, with other measures being put in place, such as policy control and income.
Okay, I guess we're having, are you done talking, or was it a network?
Oh, I'm done.
Okay, great. Now, when we talk about non-performing loans, the severity of the impact actually depends on the level of non-performing loans, depends on also on overall health of the banking system, and of course, the strength of the economy. So in your opinion, do you think Nigeria's banks are well prepared, to weather the situation? Should we get to that point, where bad loans begin to increase? Are Nigerian banks well positioned to deal with this?
Yes, I believe the Nigerian bank are well positioned to deal with it. Because in the loan business, there are a lot of considerations that have been put in place, even based on the policies that have been set also by the regulatory authorities, such as the CBN. It ensures that for every loan that is being serviced, there is also a space or a provision to ensure that, for bad loans that might occur, the bank or the entity can be able to accommodate such effectively, and also why they carry out effective recovery system, they can be able to manage that effectively. So I can be able to say clearly that yes, the banking system can be able to withstand it based on the measures, the risk assessment and the measures that they've put in place in ensuring that when such situation arise, they can be able to stand firm.
All right, thank you so much. I wouldn't let you go without, putting this particular question, and that's because it was one of the things that Fitch mentioned. It said that, just as Fitch puts it, this is like a sharp decrease where we saw that Naira exchanged at 899 Naira to the dollar as of the end of 2023. And as of February 13, we're seeing it exchange officially at 1,516, marking a 40% devaluation, and that exceeds expectations of, a more moderate depreciation in 2024. Do you think this is worrisome?
Yes, it's really worrisome. And we could also see that the Central Bank of Nigeria is really taking a whole lot of actions in trying to curb this based on various policies that they've been bringing out, even to the financial institutions, in terms of ensuring that of the recent one that came out of February 14, ensuring that even PTA and BTA are not being paid out by cash anymore, to be able to control the foreign exchange market and ensuring that there is stability and transparency. Also, we could also see the various policies that they've also put in place, even regarding banks, also ensuring that they put out the necessary dollars that they have to be able to control all of this. And you can also see a lot of other policies that the CBN is putting in place, such as the gateway system, to effectively monitor all of these things. It's really worrisome, once again, like I said, in these terms of all of these various factors that we've seen. And I believe the government also too is really, really, really concerned about it, and they are on top of trying to see how this can be managed effectively.
Absolutely. Thank you so much for your thoughts today.
Thank you very much. It's a pleasure being here.
All right. Well, that's it on Business Edge for today. Thank you for watching. You can follow us on social media. We are at News Central TV. You can also head on to our website, www.newscentral.africa, and you can download our mobile app on Play Store and App Store. Till next time, I am Perpetua Fasan Repeater. To enjoy the rest of the day. Bye for now.